This market rebound to you suggest something more lasting is taking place in terms of a recovery here?
Look, I think Rick Santelli was right as far as the liquidity being provided to the markets. And what we saw over the last few days before this rally started was a lot of liquidations, certainly in fixed income, a lot of deleveraging, from a flows perspective. From the worst week in '08, equity outflows have been 2 times worse. From the worst week in '08, fixed income flows have been 18 times worse. So a lot of outflows out there. And, we're all looking to see how long this is going to go. Claims will be a very interesting data point tomorrow. Right now, economists say about 1.5 million claims, so kind of sort of additional 1% unemployment in 1 week. It's all very quick.
Right. But again, I mean, the fact that we've been speculating for over a week now about how high in the millions it's going to go hopefully means that the worst case scenario is priced in, and maybe it could even come in better than that. Still not great, but my point is you mentioned some of the moves in stocks that we've seen here, and plenty of people have been calling this strong rebound in Boeing and others a bear market bounce. Would you agree with that characterization? What does that tell you?
Well, it's definitely the case that the worst hit have been the strongest to recover. And if you look at factors within the equity markets, the kinds of things that are outperforming are leverage and low quality. So kind of a bounce back in that regard. I haven't seen a whole lot of differentiation, some, but not a whole lot. And I'm still seeing liquidations and things like mortgage REITs. The agency market is better from the Fed, but the non-agency mortgage market is worse. So there's still a lot of clogging in the plumbing that the Fed and others are trying to fix, but it's still a bit messy. So to me, it's too early to call it as hey, it's an all clear signal.
Yeah, we're actually going to dig into that in just a moment. Jeff, let me bring you in. I know you've remained constructive on these markets and seen value in many different sectors. Industrials are now one of the strongest parts of the market on the back of the relief bill. Are there places you'd still be chasing here?
Well, when you say chasing, no, I think there would be places that we would be taking advantage of. And while we have remained constructive, Kelly, I would agree with the other guests that we don't have the all-clear signal. And our time frame is longer than just, is this the bottom? And I think we very well could have a retest after we've gotten through this great news with regard to the package. And I think yesterday the market was up because there was some pretty good news flow on coronavirus, particularly in the Asian area, and progress made in that front. So, while the technicals within Stockland have looked pretty good the past couple days, it's been refreshing to see high beta outperform low beta and to see small caps, do very well. And we do see sectors that we think are particularly attractive. Yet I think it's too early to just say, hey, buy on the dips. This is all done. It's nothing but up from here. After we've had this euphoria from the policy announcement that seems to be in play, we're still going to meet this second quarter rough patch in the economy. And it's one thing to see it coming. It's another thing to actually read it in the papers every day. And then I think the coronavirus news, are we really bending the curve? That will be very important in the coming weeks here.
Sure.
So we're upgrading, we're holding our ground, but we're not aggressive buyers in here.
Finally, Jeff, one just anecdotal thing people like to point out about bottoms is you often have Warren Buffett coming in and buying something when everybody else thinks he's crazy. And we haven't seen that yet. And does that lack of a big splashy announcement from Berkshire tell you something?
Well, I'm not going to key on one buyer in Berkshire because, Warren Buffett also has been aggressively, buying some financials and owning some airline stocks that have just been hammered and that kind of thing. So we all have our good points and our weak points. But we do look for continued strong leadership in some of the most beaten up names to really move, to see a fewer number of stocks hitting lows, 52-week lows, and those types of things. And that's beginning to happen. We still need to see more of that.
All right, Jason, confirmation of that. What would you like to see more of to feel more constructive on the market?
Look, I actually think at this point there are lots of opportunities out there. I think we're seeing a margin of safety in certain prices that gives you some faith that you're going to get paid back over a long period of time. If you take high yield, for example, right now we're at 1,100. We priced an 1,100 spread. When you go through 900, 25 times that's happened, your 1 year forward return, 25 times has been positive and averages over 30%. So there's stuff to do. But for an all clear signal, Look, I'm not an epidemiologist. I keep looking at the news just like everybody else. I don't think you're going to get one signal that's all clear. It's not. Don't try to pick the bottom. I've bought the bottom before, but I've never just bought the bottom. So just try to find value. There is value out there for sure.